So now, if you look at GBP USD on the monthly time frame, those guys who are in the liquidity class, is something I want to also to you to understand. So on the monthly time frame, price took out buyers, and whatever is happening, as by my understanding, all this is just a liquidation before we continue selling. But to my understanding, still, if we look at the monthly price action, let's just look at how candlestick are behaving. Let me just from the left side of the screen. This area is more of like liquidity engineering. It's more of like liquidity engineering. If you look at what has been happening, we've had an impulsive move. If you look at the buying candlestick, there are less, but if you look at the selling candlestick, there are so many. That means the dominating participant in this market are the sellers on this particular move. So the dominating participant in that particular area the sellers. Now, if you look at the liquidation, remember this monthly time frame. So I want you guys to be keen. If you look at this candlestick, this one, the market probably tried to sell, then buyers came in, the candlestick closed in that manner. Then later on, sellers came in again massively. Kindly make sure your mic is muted, guys. Make sure once you join the meeting, you have your mic muted so that we don't have a distraction. Guys, make sure once you join the meeting, you mute your mic so that you don't have distraction. Or rather, if you can't, we will remove you, kindly. All right, so I was saying this. If you look at the monthly candlestick, buyers came in, then sellers came in, took them out, price continued selling. Then we also have another candlestick at this particular area, this one. What happened? You need to look at how the bodies form and how the wicks also forms. What happened? Sellers came in, and then liquidation happened. Price tried to come inside, right? Inside the wicks. And what happened? The market sold. Again, you can see buyers tries to come in and all that. And then later on, price came, took buyers, and the trend has been going on like that. So if you look at the aspect of the last area that we had, which was very important, we had this point and this particular point. I won't explain much about that. Now, from this zone, huku chini, let me try to make it a bit bigger. That is a monthly time frame. I want to explain to you something. So we can clearly see that we have this area of liquidity that price came and was taken by this candlestick, the monthly chart, right? Price came and took that. Price came and took that particular area. When that happened, it is now facilitating the monthly liquidation process before we continue with the main trend. Like whatever is happening is a pullback from the monthly time frame. Now, after the liquidation started with this first move, those guys who understand what we call okay, this is a formation, the monthly time frame. This is a formation on the monthly time frame that was formed after price took this level. So it's like a formation that is just on the zone where price is doing a shift, or rather people call it change of character on the monthly time frame. For me, I will call it a shift. So after that, this is the liquidity that was left. So price bought, came back to this zone and took out liquidity, and then from there, again, buyers came in, they went all the way up, and they have taken this particular zone. Are we together? So as far as I'm concerned, what is happening right now in the monthly time frame, this was the last zone where we had buyers now, and then sellers have been able to come with these candlesticks. Sellers have been able to come in massively. That tells us now sellers are, from a higher time frame, sellers are taking over, and probably the liquidation process on the monthly time frame might have come to an end. So what I'm anticipating is that price has already reacted on the monthly time frame. And you can see last month, buyers came in impulsively. So this current month, we have buyers trying to push the market. If you go to the daily chart, go to the daily chart. So let us just focus on this particular move. Let us just focus on this particular move. If you look at the daily chart, this red circle was my area of liquidity on the monthly level. If you look at the liquidation process, you can see that the market, now this is simple market structure, understanding market structure. The market formed a process here that facilitated the push to the upside and price went all the way. Are you guys following on the chart section? Let me see on the chart section if you guys are following. Now price has retraced back. What sellers came in. We have had a push that is coming all the way. So right now, right now, I'm bearish on okay, you can see Wilson, Irangu, Leonard, Robert, Victor, or perfect. Guys are following. So right now, what I'm anticipating on the to facilitate the monthly time frame coordination, sorry, to facilitate the monthly buyers, I need to see price coming. I need to see price coming all the way to around 1.314449 so that I can get some nice swing trades that will take me all the way to the downside. I think I had done it on fforex.com because it doesn't have a gap. So these are the zones that I'm looking into. So probably as the market opens, I need to see this happen. I'll need to see probably price come all the way in these few months ahead of us. I'll need to focus on this zone and see how price first of all opens. Whatever, if it gives us a confirmation that we'll continue selling, then I'm gonna aim this zone, right? If we can't see any confirmation of this particular zone, then we're gonna buy, and then now from here we'll be selling to facilitate. So those are the two scenarios that I'm looking into from the aspect of swing trading. I want you to take note of that from the aspect of swing trading. The aspect of swing trading. So I need to finalize so that others can as well share their charts. So if you come to the intraday levels, first of all, that is the daily chart. So if I focus on this particular zone, the daily chart, the last zone that we had for buyers is we had this point, and we also have this point. So if you understand market structure, how price behaves in terms of to validate a structure, already these point, this let me call it point B. Let me call this point A. This point B has validated to us that this point B has validated to us that we will continue selling. Why? If you go further, I'll show you that on 1 hour or 4 hours. Price has come back and it may take out buyers. Sorry, it may take out, yes, buyers. It's like a liquidity sweep. Now, if you look at how the candlestick body closed, it closed below that particular zone. So I'm anticipating for the next few days, price is going to be selling. So the most important thing, guys, is to know what are you targeting. If you get certain number of pips, you're good to go. So if you measure the pips from maybe these particular levels randomly, which I'm going to refine, maybe even from there all the way to the downside, that's like almost 300 pips. If you get even 500 pips in a week, or even 200 pips, although it depends with the pair that you're trading. There are those pairs that are very high, they are very volatile, and there are those that are mid, and then there are those that are very low, like Euro USD. This one is among the mid term or mid kind, they have some mid kind of volatility. So, kiangalia kwa daily, already tunaona price ilikuja retest area liquidity, then ikakuja, imetake out. So, I'm anticipating we'll continue selling, but we don't just sell randomly. So, let's check on 4 hours and day and 1 hour time frame. Check on the 4 hours chart. Don't worry with those lines of mine. If you check on the 4 hours chart, we can see price has started forming a liquidation. The first point, in the first place, the market was buying to facilitate higher time frame coordination. Price did these. These gaps zina confuse watu. Let me use a broker that doesn't have gaps. I think I'll use forex.com. They don't have gaps. Hold on, let me remove the drawings. If you check on forex.com, we don't have those gaps. So allow me to remove these. All right, on 4 hours, where we can get a trade for this coming day, this coming week. If you look at what the market has done, that swing point price didn't close above it. So if you go to 1 hour, 30 minutes, you'll be able to see a very nice liquidation process. So the market came trade below 21.239 and 950 levels, and then went up impulsively. If you look at the last zone that we had, where we had buyers, is at this particular area at around 1.25037. Then sellers came in impulsively. This was supposed to be a support level. Later on, price came to react on this area as what we call a flip zone. Now, I'm anticipating the market to come all the way to this level. Because this area, this time frame liquidity daily haijakuwa fully tapped in. Before we get there, of course, we must start with this area. Let me see. Yes. Before we get there, okay, before we buy or anything else happen, I need to see price coming. I need to see price coming all the way to this area. I need to see price coming all the way to this area. That's around 170 pips before maybe we buy or anything else. But already I've shared with you what is I'm expecting on the higher time frame monthly, then daily. So I need to see prices selling. And if it sells and reacts at this area, we need to see what happens. If it gives us a good confirmation, we'll continue selling. That's why I tell you guys, you need to be flexible. Don't just stick to, you need to be flexible with price action, to be very flexible with price action. So for me, I'm bearish on GBP USD also. So areas of interest, unajua levels za intraday trading ni 4 hours, 1 hour and below. Confirmations and refinement is 30 minutes, 15 minutes, 5 minutes and all that. So as far as I'm concerned, even if you look at the weekly levels, you can still see that we are very, very bearish, very, very bearish, very, very bearish. Very, very bearish. So let's wait for the market to open tomorrow, and then we'll be able to get the day trading opportunities. Is there anyone who has a question before I give the next person chance to? Anyone who has a question before I give a chance to the next person? USD JPY. I need to see price coming to around 149. I need to see price coming to around 149. And I'll continue buying. That is on the USD JPY. So there's this thing of correlation, dollar. Then we have the JPY baskets. You need to be very, very keen. You don't need to correlate with pairs blindly. As much as you do the correlation, you also need to understand uh, on higher time frame how is dollar performing, and then on the same time frames on other asset how is price performing. And then now when you do the technical analysis, you need to understand which areas are very important. You cannot just say because dollar is buying, I'm gonna sell. No, it doesn't work like that. You need to understand different price levels. So guys, I think up to that point so that others can as well share. I'm gonna end it there. If there's a question, we'll answer them at the end of the session. In the meeting, I can see we have Benji. I can see Henry's here. I can see Harris. I don't know if Harris, are you there? So, Benji, are you in position to take over?
Yeah, sure.
All right, let me make you and then you go ahead.
Thank you so much for the presentation. Wonderful. I hope you guys have had kuna top-down analysis. Nege inaitwaje bottom up?
Yes,
Sijui kama ni ya Ruto.
you need a down top.
Down top. Okay.
Yes, you can go
All
on.
right. All right, thank you so much. Unajua sisi tumezoea kule kwingine kunaitwa I want to share. Only one presenter can share at a time.
Okay. Let me. Oh, I need to stop sharing, right?
Yes.
Okay, perfect.
Okay, so let me share. As I'm sharing, I hope the screen is visible. Inaonekana. Baswete.
From my end, I can't see the screen.
Wow. This meeting, haionekani kabisa. And nimesha imagine,
Maybe. Okay, other guys are seeing it. Let me check on my end. Maybe niko na shida.
Andrew, unasemaje?
Mimi naiona mzee.
Oh, unaiona. Okay. Okay, what are you seeing?
DXY chart ya
Okay.
DXY weekly.
Very nice. So, Baswete has given us a very good presentation. I will do just for the dollar because I'm having other sentiments actually on the dollar. Dollar, it's not a counter, but we as traders usually see different things, and it's allowed because, as Baswete has said, if you don't see areas of liquidity, you're going to become the liquidity, which is so true. Another thing about this market moves from zone to zones. Okay, after taking out liquidity, the market moves from one zone to the other. So you just need to know where the market is moving and areas of liquidity, where is the market headed to. Simple things that I usually tell people after the market. Let me just do an example here.
No problem.
All right, very nice. So after the market takes out a very interesting high, probably it can be a previous week high, it can be a daily high, the market usually moves. Now, the market has taken what we call external range liquidity, which is called ERL. The market then tends to move to IRL. IRL is internal, okay? It can move there, then we can continue going where? Coming higher. In this particular area, we usually know, I usually trade, my trades are usually so simple, demand and supply, okay? So simple, but I have to also integrate SMC and also the ICT concepts, okay? Now, when this market does this, okay, so many people usually get it twisted that now from the market, from this particular area, when the market comes down, now usually people think that the market has started doing what? Started selling. Nevertheless, the market has come to collect liquidity, okay, sweep this low again, and then continue going higher. Now, a very interesting thing is about the dollar. The dollar currently, as you can see, this is on the daily time frame. On the daily time frame, The market, as you can see, it's on a bullish uptrend, but it has reached at a particular zone, this area, where the market now has started giving signs of what? Bearish moves. Okay, why? Simple thing. Number one, we have a BPR, which is here. The market has been respecting it very well. And recently, the market respected it. This is on a daily time frame. Another thing is after the market had all this bullish momentum that we had, it swept this liquidity, then now where? Going down. After going below, and this area, this that I've marked here, this is a clear market structure shift on the daily time frame. This is the dollar index. We don't trade the dollar, but we can use it to find correlations with other pairs such as GU, EU, and USD CHF and USD CAD. Sijaingia kwa gold bado. I'll talk about the dollar first because we have had an FP, and this week we are having CPI on Wednesday, which is going to be so interesting. Now, when the market had a market structure shift, the market later opened with a volume imbalance that is here, went all the way till the deep premium area, okay? And when it tapped the deep premium area, we can see that the market left a very big rejection, all right? And this rejection symbolizes that now the bears have started kicking in. Another interesting thing is this is on the daily also, just to remind you. We also have a minor fair value gap, a double fair value gap that is here. We can see here and here. So the market also tapped into it and left a rejection. So what am I expecting this week? I'm expecting a bearish dollar. This is my expectation because yes, this is also lots of liquidity, but bears have already started kicking in, and I'm not expecting a bearish dollar immediately from here. I'm expecting actually this market to pump higher. Okay, comes to areas of liquidity, then we can have a nice drop. Okay, so this low is also a liquidity, and also this low is also a liquidity area for me, where the market I'm seeing is going to come. Because as I told you, when the market sweeps liquidity, we have a clear market structure shift. It has come to the deep premium area. It has tapped into it, and we are seeing bearish moves. Okay, so this is one candle, Tuesday candle, Wednesday candle, then Thursday and Friday we can see pullbacks. Okay, so I'm expecting the market to pump even higher. We can also see we can also expect a new week open market gap. All right, then from there we can easily now probably from CPI we can have a bearish continuation of this market, because since this was on Monday, 13th of January, the market started having bearish trends, and I will be bearish, but not immediately, but CPI will give us a clear direction. Either we might continue going higher, or we might continue going lower. But for me, I'm expecting a bearish dollar. That's on the dollar. The number two, because I'll be very brief, this is gold. Let me refresh it. And this is going to be my last pair that I'm going to be looking at. Simple things for beginners. Number one, come to the monthly time frame, top-down analysis. Okay, check how the monthly time frame is behaving. The same thing as Basweti has told you guys. You need to check, because we have already started the month, and if you position yourself early enough, and the forex market is all about speculation. If you speculate early and you see the market trends, and you have the third eye, we usually say that if you have the third eye, see where the market is going, okay, then you're going to be on a better page. So this is on the monthly time frame. The market in January was very bullish. It broke this high, so we're expecting the market to continue going where? Going higher. Okay, this is on the monthly. And remember, we can have a monthly sentiment, and we can have 1 hour or 30 minutes sentiment, which is going to be not the same, which is going to be totally different. So the monthly can be bullish, but on the 30 minutes, we can be bearish. So it depends, okay? So come with me, we're going on well. Now on the weekly chart, mark simple, this is the weekly high and the weekly low, okay? Can we see imbalances in the market? Not really. I don't see any imbalances in the market. The market is clearly bullish, and what I'm expecting, the market to continue going higher. This is all-time highs have been broken, and each and every day the market is breaking all-time highs. So I'm expecting the market to pump even where? Higher, because it broke even higher than the previous week's high. When we come to the daily now, the narrative now starts changing. Okay, why? Because Friday's candle actually was very interesting, okay, because of NFP. All right, now this candle, this is on a daily. Wednesday's high was broken, but the market actually did what? Closed within the range of this candle. That's this candle. Now that's, for me, this gives me a bearish sentiment that probably we might start dropping and seeing bearish trends on gold. Okay, the part that I'm going to be looking at is this candle, which is here. It's going to be an order block candle. ICT students usually call it a unicorn. It's going to give us a unicorn so that we can continue going where? Going higher, right? So probably I might expect a push to the downside, come into this area, then we can continue going higher. Now these 1, 2, 3 candles are giving me bearish sentiments, and from here, this is where things are going to get interesting. Yes, it's very risky to sell on all-time high. Sikatai, I totally agree, because there are some people who have been selling gold, wanajaribu tu kusell but inakataa, and it's very risky. So what you're supposed to look for is actually looking for buys. I even told Basweti, I have decided to divorce gold because gold is not giving us a clear market indication, or take a buy. Where are we going to take a buy at? Where are we going to take a sell at? Okay, so it's quite difficult. But whatever I'm seeing here, there is these 3 candles is giving me some good sentiments. When I come to the 4 hours time frame, now things are going to get even more interesting. All right, things are even going to get more interesting. Now, come with me, msipotee mahali. Now, okay, the meeting is going to end in the next 10 minutes. I'll be done in the next 10 minutes. Now, the market, as you can see, was bullish. It was giving us high highs and higher lows. Okay. Then we can see bearish sentiments that then the market came, tapped into this area. We have a clear imbalance at this particular area. Okay, swept this low, then the market went even higher. Then on Friday, we can see that the market actually broke Wednesday's high, left a very big rejection. All this is liquidity, which I'm expecting the market actually to fill this liquidity. Okay, this imbalance. When we come to lower time frame, I'm going to see it because we're on the 4 hours. Then this, for me, it's engineered liquidity for those who want to buy at this particular area, because I'm seeing so many people want to buy at this particular area. So for me, this is more like liquidity. So this is not a clear area to take a buy, because so many people want to take a buy here. For me, I wouldn't take a buy at this particular area. This is, for me, it's more like engineered liquidity to because from here the market went higher, broke this high, then fell off. Okay, so whatever I want to see is 2 things for me in the market. Either number 1, the market to come back higher, come to this deep premium area, then we take a sell from here. All right, and this for me is going to be my take profit at this particular. We have written ENG. ENG is not English, it's engineered liquidity. Then this is the area where probably I'll be looking for buys at this particular area. Okay, I don't trade trend lines, but there's something that I noticed that the market is doing. Okay, we can see clearly this market has been respecting this trend line. I don't trend trend lines, but this was something that I noticed, and this gold has been respecting this trend line. So if we can have a clear drop to this particular area, okay, this for me is like more like a demand zone. With the trend line, we can have some good buys. So the first narrative that I want to see from the market, they may come lower probably to the 1 hour time frame, is simple on gold. If this market comes to this deep premium area, we'll have to take a sell to this place that I've called engineered liquidity. Then the market comes back to this area, I can have a buy, and we can continue going where? Going higher, because remember the market is bullish, so never counter trade. Counter trading is very risky, and this is a very risky trade, I know, but I will be hata kwa trades tukiingia trade yote you are risking. That's why you need to have a risk management parameter which aligns with your account size. Okay, so this is the narrative that I'm having on gold, a sell. But if this market comes back below and comes down probably to this area or this area, then this sell is going to be invalidated, because the market will have seeked liquidity below to come and take to collect more buyers so that they can push the market where? Higher. But if the market opens and comes to this particular area first, then I will have the buys. I will have the sells, sorry. Then I will buy from here. But if the market comes below to this area, probably this area or this area, those are clear demand areas. I will not take the buy. I will not take the sell from this particular area, but I will decide to buy the market, and this sell is going to be invalidated. That's the narrative that I'm having on gold, and I would love to see how the market is going to open from tomorrow. So those are my sentiments. I know they are double-sided, but we have to speculate the market because we don't have a clear indication, because the market is usually spontaneous. It can react either way. So you need to have a clear move. If it reacts on the upward side, what are you going to do? If it reacts on the downward side, what are you going to do? And that's why we are here as traders, to see and see whatever the market is going to do, so that you can have probably a buy or a sell, and why. Okay, so this is on gold. That's the last thing I'm going to do. Back to you, Basweti, as we continue with the meeting. Basweti, if you can hear me, or I give the mic.
Sorry. Okay. That is a very nice presentation. So I think the purpose of this meeting actually is to share ideas based on what we understand from the market. Even if we are contradicting in terms of the dollar, it's still okay, no worries. So what we do, because we intended to have a session for 1 hour, and it's 9:16. Maybe this time we can allow questions or maybe reactions, or maybe if someone has anything to say, then any other developments will be able to share in our various groups that we are in. The Discord, WhatsApp groups, and on Telegram, we'll be able to share all those other developing updates. Whatever we do is just a forecast. You know, we might do all these analysis, and then tomorrow, Monday, Tuesday, everything changes. What do we do? As a trader, you have to go back to the chart and go with the flow of whatever methodology that you're using in the market, because this is just a forecast based on experience. But if you go to the chart once the market opens tomorrow, and then you realize that things are not going the way you anticipated, that's when now you sit down again and try to understand what price is telling you. Are we guys together? So is there anyone who has a question or maybe something to add on? Maybe we can have the next 5 minutes before the meeting ends. Silence means two things: confusion, satisfied, or tired, or sleeping. So where are we? Maybe we can use the comment section to give out reactions, comments. If you've been following the meeting, if you have learned anything, or if you're agreeing with any ideologies, if you're disagreeing, that's what I'm saying. Feedback is very important, especially when it comes to online presentations or online meeting.